Welcome back to the Deep Dive. Today, we're going to be putting on our investor hats
Oh, yeah.
and taking a deep dive into Shopify's latest financial reports.
Love it.
We've got excerpts from their June 30, 2024 6K filing balance sheets.
Oh, exciting.
Statements of operations, cash flow analysis, all that good stuff.
The works. Think of it like
Yeah, the works.
this is like your backstage pass to that exclusive investor meeting, you know?
Oh, I like
Where
that.
we break down all the numbers and
Yeah.
look at all the trends that are really shaping, the future of Shopify.
Yeah, so if you are curious about where Shopify stands financially and what that might mean for future investments,
Mm-hmm.
you are in the right place.
Absolutely.
Let's kick things off by looking at the big picture.
Okay, sounds good.
When we talk about Shopify,
Yeah.
what is their business model built on?
So their business model really has like these two main revenue streams.
Okay.
You've got subscription solutions, which is like their core platform offering, and then merchant solutions, which is kind of like all the value-added services on top of that help businesses really thrive.
Okay.
And understanding that for investors, I think, is super crucial because it shows us where their money is coming from
Right.
and how they're kind of positioning themselves for growth going forward.
Yes, the foundation of their
Hmm.
whole financial situation.
Mm-hmm.
Speaking of growth, their latest report shows a 22% year-over-year
Wow.
increase in revenue,
That's huge.
reaching $3.9 billion.
Pretty impressive, right?
It is impressive. But
Great.
as always, you tell me the devil is in the details.
Oh, always, always.
So let's break down that revenue a little bit.
Okay.
Merchant Solutions, which makes up 73%
Okay.
of total revenue, is growing much faster than Subscription Solutions
Interesting.
at 27%.
So what does that tell us?
What does that tell us?
I think it tells us that Shopify is really focusing strategically on those add-on services.
Okay.
Like they're going beyond just the platform itself.
So they're not just renting out digital storefronts anymore.
Right. Exactly.
Really trying to build out this whole ecosystem
It's all about the ecosystem these days.
to support those businesses.
Mm-hmm.
Is that a sustainable strategy?
That's the million-dollar question, isn't it?
It is.
One of the key drivers of Merchant Solutions growth is Shopify payments.
Oh, yeah, their in-house payment processing.
Exactly. And more merchants are opting to use this, and this is incredibly profitable for Shopify.
That makes sense.
Think about it. They're already handling all the transactions.
Right.
So why not kind of cut out the middleman and take a piece of that pie?
Right. It's a brilliant move.
It is.
Because it leverages their existing merchant base.
Yeah.
And it creates this sticky ecosystem.
Mm.
Like once a merchant integrates Shopify payments, they're much less likely to switch to a competitor.
You got it. It's like this self-reinforcing cycle of growth.
I like that.
But, of course, investors need to consider, can this growth be sustained?
Yeah.
Can they keep attracting new merchants to Shopify payments?
Right.
Will there be more competition from other payment providers?
Right. Are those other providers going to step up their game?
Exactly. These are the questions I think investors need to be asking.
Yeah. Okay. Now let's unpack another piece of the financial puzzle.
Okay.
Cost of revenue.
Oh.
Overall, it has increased.
Makes sense.
But here's where things get interesting.
Okay, I'm intrigued.
The cost of merchant solutions as a percentage of revenue actually decreased. That seems counterintuitive.
Yeah, it does a little bit.
Shouldn't higher revenue mean higher costs?
Typically, yes, but there's kind of a twist here.
Okay.
You remember a few years ago, Shopify's big push into logistics?
Oh, yeah.
Well, they sold those businesses off in Q2 of 2023.
Okay.
And that's having like a ripple effect on their year-over-year comparisons.
So by shedding those logistics businesses,
Yeah.
they've also shed a lot of the associated costs.
Exactly.
But from an investor perspective, was that a smart move?
Well, I think it depends on your investment horizon.
Okay.
In the short term,
Yeah.
it might look like a step backwards, like
Yeah.
they're giving up potential revenue, taking a hit on their bottom line.
Right.
But when you zoom out and look at it from the long-term perspective, it could be a really smart move.
Well,
Like by streamlining their operations,
Yeah.
focusing on what they're really good at,
Right.
they're positioning themselves for more profitable growth down the line.
So it's like they're making this calculated risk,
Yeah.
betting that this strategic realignment is going to lead to a stronger
Mm-hmm.
and more profitable business in the long run.
Exactly.
Speaking of profitability, let's shift gears and look at operating expenses.
Sounds good.
Overall, they're lower,
Okay, that's good news.
which sounds promising,
Yeah?
but I know that I should be looking beyond those headlines.
Oh, you're learning.
So,
Help me break down those operating expenses a little bit.
okay, so let's break it down.
What's the story there? Sales and marketing expenses actually went up.
Okay.
And that's driven by, higher affiliate payouts and just more marketing spend.
Okay.
And, that might raise some eyebrows for investors.
Yeah, is that a red flag or is that...
Right. Are they just throwing money at a problem?
Yeah, are they just like spending money to spend money?
Or is this a strategic investment to fuel that future growth?
Right, that's the question.
That's the key question.
Are they acquiring new
Right.
customers at a sustainable cost?
Exactly.
Yeah, are they building brand awareness
Mm-hmm.
that's going to pay off in the long run?
Yeah, we need more data, I think, to make a definitive judgment on that.
Okay.
But it's definitely something investors should be keeping a close eye on.
Okay.
Then we've got R&D,
Okay, research and development.
which actually went down quite a bit.
Interesting.
And this is where things get, I think, a little more complex.
Right.
Because it's not just a simple case of, cutting costs.
Right.
Part of it is due to this, acceleration of stock-based compensation.
Okay.
And remember that big workforce reduction they did back in 2023?
Oh, right, yeah.
So this kind of raises a big question for investors.
Yeah?
Is Shopify sacrificing future innovation for, short-term gains?
Right. Are they cutting corners to make their balance sheet look a little prettier?
Yeah. Are they cutting corners on R&D, or are they just being more efficient with how they allocate their resources?
Right. It's tough to say.
It is a tough call.
We'll need more time to see how that plays out.
Yeah, and see if this trend continues.
Yeah. Now, the last piece of the operating expense puzzle
Okay.
is G&A,
Right.
general and administrative expenses.
Mm-hmm.
Those also decreased,
Good news, potentially.
which seems like a good thing.
Yeah.
But as always, there's a caveat.
Oh, there's always a caveat.
Okay.
In this case, the numbers are a little bit distorted
Okay.
because of this one-time legal matter reversal.
Mm.
So it's a little bit tricky to understand, the underlying trend here
Yeah.
is Shopify truly being more efficient in its general operations? Right.
Or are we being misled by this kind of one-off event?
Yeah, it's we need more data points.
Yeah, we need to see, G&A expenses over several quarters
Right.
compared to revenue growth.
Yeah, it's like trying to read tea leaves.
It is a bit, isn't it?
We need more data points to get a reliable sense of what's going on.
Absolutely. But, that's what makes this stuff so interesting.
Yeah, it's like this detective story.
It is.
We're having to piece together all these little clues
Mm-hmm.
to understand the bigger picture.
I love that analogy.
And that's exactly what we're going to continue to do
Yes.
in the next part of our deep dive.
Right.
We're going to be examining Shopify's profitability, cash flow,
Ooh, cash flow.
and some of those key risk factors that investors need to keep in mind.
Can't forget about the risk.
So buckle up.
Buckle up.
We're going to take this deep dive to the next level.
Love it.
Welcome back to the deep dive.
Right.
Last time we were really digging into Shopify's revenue and operating expenses.
Yeah. Setting the stage. Let's move on to profitability,
Okay.
which I have a feeling can be a little bit of a puzzle.
It can be, yeah. Shopify reported a net income of $171 million in the second quarter of 2024,
Okay.
which, on the surface, that looks pretty good.
It does. It does.
Yeah.
But I distinctly remember
Yeah.
noting that they also reported a loss for the first 6 months of the year.
Uh-huh.
So how does that add up?
Yeah, that's a great question. And that's where I think seasonality really comes into play.
Okay.
Remember Shopify's fourth quarter,
Right.
which includes Black Friday, Cyber Monday.
Yeah, the holiday season.
That's historically their strongest.
Yeah.
So a profitable Q2 followed by, a 6-month loss.
Right.
It's not necessarily a red flag. It's a
Okay.
pattern we've seen before.
Okay, so seasonality explains some of those discrepancies.
Yeah.
Is there anything else, though,
Mm.
that's contributing to this profitability puzzle?
Yeah, I think there is. Take a look at their other expense income net
Okay.
in the financial statements.
Oh.
This includes things like unrealized gains or losses on investments.
Okay.
And these can really swing wildly
Okay.
and add a layer of unpredictability to their earnings.
So some of their profitability is tied to these investments that are kind of outside of their core business.
Right.
Is that a good thing or a bad thing?
I mean, for a long-term investor,
Yeah.
it's a little bit of a double-edged sword.
Okay, I like that.
On the one hand,
Mm-hmm.
it shows that they're actively managing their capital
Okay.
and looking for ways to grow, beyond their core business,
Yeah.
which can be really attractive to investors who are looking for, that growth potential.
But on the other hand,
On the other hand, it introduces, an element of risk.
Uh-huh.
The value of those investments can fluctuate significantly, and that can impact their overall profitability.
so investors need to weigh those potential rewards
Yeah.
against those potential risks.
It's all about that balance, isn't it?
It is. It is. Well, let's dive into cash flow then.
Yeah. Okay, let's do it.
Which you always say is like the lifeblood of any business.
Absolutely. It's the lifeblood.
What does Shopify's cash flow statement reveal?
So their cash flow statement, some interesting insights there.
Okay.
Their cash from operations is up significantly.
Okay.
And this is largely driven by, you guessed it,
I think I know where this is going.
Shopify payments.
Shopify payment.
It's a cash-generating machine for them.
Okay.
So we're seeing that pattern again.
Yeah.
Shopify payments really is, I think, a cornerstone of their financial strategy.
Okay, but what about their investing activities?
Right.
Where are they putting all this cash to work?
So a few key areas: loans to merchants,
Okay.
marketable securities, and acquisitions.
Okay.
And these investments, I think, are crucial to understand their long-term vision.
Okay.
You know, for example, the loans to merchants, it's not just about generating interest income.
Okay.
It's about strengthening their ecosystem and making sure their merchants are successful.
It's about building that partnership, not just the transaction.
It's a win-win.
Yeah.
You know, they're not just a platform, they're a partner invested in their merchants' success.
I like that.
But acquisitions, well, those are exciting.
Uh-huh.
They can also be risky.
Okay.
So how can investors evaluate whether they're making smart acquisitions?
Yeah, that's a good question.
That's the million-dollar question, I think, for any investor. Acquisitions should align with the company's strategic goals
Okay.
and have a clear path to profitability.
Okay.
So are they acquiring companies that fill gaps in their product offerings?
Right.
Are they acquiring technology that gives them an advantage over their competitors?
Right.
Are they entering new markets that have, you know, huge growth potential?
Well, so it's not just acquiring to acquire.
Exactly.
It's about making these strategic moves
Yeah.
that strengthen their position in the market.
It's all about that chess game,
Yeah.
you know, making the right moves.
Now, before we get too carried away with the positive aspects
Yeah.
of Shopify's financials, we need to talk about risk.
Okay.
Every investment has risk,
Always.
and Shopify's no exception.
Absolutely.
So what are some of those key risk factors?
So Shopify's 6K filing actually outlines some key risk factors investors need to be aware of.
Okay, good.
One is foreign exchange risk.
Okay.
So they're increasingly international,
Yeah.
which means their earnings are vulnerable to fluctuations
Okay.
in currency exchange rates.
Right. So like if the Canadian dollar weakens against the US dollar,
Exactly.
that could negatively impact their earnings.
Even if the underlying business is doing well.
Right, right. Even if fundamentally
Yeah,
everything's strong.
exactly.
How are they mitigating that risk?
Good question. So they use a variety of hedging strategies,
Okay.
things like foreign exchange forward contracts and options.
Okay.
But these strategies aren't foolproof.
Right.
And I think investors should monitor how effective they are really closely.
Okay, so currency fluctuations are one thing to watch out for. What else is there?
Another risk factor I would say is interest rate sensitivity.
Okay.
So Shopify has a large cash position,
Yeah.
which generally speaking is a good thing.
Yeah, I would think so.
But it also means that they're very susceptible to changes in interest rates.
Wait, so wouldn't higher interest rates be beneficial
That's a good question.
for a company with a lot of cash on hand?
Yeah, you would think.
They can earn more interest income.
Yes,
Well,
but
right.
higher interest rates also make it more expensive to borrow money,
Oh, right.
which could impact their ability to invest in growth or make acquisitions.
So it's not just about how much cash they have.
Right.
It's about how effectively they manage it
Exactly.
in this changing interest rate environment.
It's a balancing act.
Got it. Okay. What about inflation? That's been a major concern for everybody.
It has.
Businesses across all sectors.
It's been a wild card.
How does that play into Shopify's situation?
Well, I think inflation is something that can significantly impact both Shopify and its merchants.
Okay.
On the one hand, it can really increase their operating costs.
Yeah.
You know, everything from salaries to marketing just becomes more expensive.
It's more expensive to do business
It is.
across the board.
But it can also impact their merchants' ability to sell their products.
Right, because if consumers are
Yeah.
feeling the pinch of inflation,
exactly.
they're going to cut back on discretionary spending.
Yeah. And that could hurt Shopify's GMV.
So it's like a double whammy.
It is. It's a complex issue with no easy solutions, really.
Yeah.
We need to see how Shopify kind of adapts
Okay.
their pricing strategies and cost management.
To navigate all of this.
Yeah, to navigate this environment.
So many factors to consider.
There are.
It's like we have to be part detective, part economist,
Yeah.
part fortune teller
It's true.
to really get a grasp on
to wrap your head around it all.
their financial health.
That's what makes it so interesting, right?
It is. Well,
In this next part, we'll kind of bring all these threads together
okay.
and discuss, what it all means for investors like you.
All right.
Stay tuned for the grand finale.
Welcome back to the deep dive.
Yeah.
We've spent the last 2 segments really dissecting these Shopify financial reports.
Yeah, lots of numbers.
Sifting through all the data and uncovering those hidden insights, that most people might miss.
Yeah, it's been quite the journey.
It has been.
But, remember, the goal isn't just to understand all the numbers.
Right.
It's to understand what those numbers tell us about Shopify's future.
Exactly.
And what that might mean for you as an investor.
Right. So let's bring it all together.
Okay, sounds good.
What are the key takeaways for investors?
All right, so from my perspective, I think the biggest thing to watch is how well Shopify continues to execute on that merchant solutions strategy.
Okay.
Can they maintain that impressive growth rate in Shopify payments?
Right.
Can they seamlessly integrate their acquisitions and make sure those generate a positive return?
Right.
These are, I think, crucial questions that will really determine their long-term success.
Yeah, it's about proving that this ecosystem approach
Yeah.
isn't just a good story,
Right.
but it's a solid, profitable strategy.
Exactly. And then beyond that, investors should be paying close attention to how Shopify is managing its foreign exchange and interest rate risk.
Okay.
Those are kind of those external factors that can really, throw a wrench in the works.
Yeah.
But their ability to kind of mitigate those risks is going to be essential for protecting their profitability.
Right. It's about being resilient, adaptable in this changing global landscape.
Yeah, the world's changing fast.
It is. And of course, we can't forget about inflation.
The elephant in the room.
It is the elephant in the room.
Yeah.
Could impact both Shopify and its merchants.
Yeah, in some unpredictable ways.
So what does all this mean for you,
Yeah.
our listener, who might be considering adding Shopify to their portfolio?
Right.
Is it a buy, a sell, or a hold?
If there's one thing you take away from our deep dive today, it's that there's no easy answer to that question.
Right.
Shopify is a company with huge potential.
Yeah.
They're the dominant player in a really rapidly growing market, and they're making, I think, really smart strategic moves to expand their reach and deepen those relationships with their merchants.
They're not just riding the e-commerce wave. They're
Right.
trying to shape it.
Exactly. But at the same time, they're facing some real challenges.
Right.
Competition, macroeconomic uncertainty,
Yeah.
and the execution risks that come with any kind of ambitious growth strategy.
So it's a classic high risk, high reward.
Yeah, you could say that. I think the key is to really weigh those potential rewards against those potential risks and decide if Shopify aligns with your own investment goals and risk tolerance.
Right. If you're a long-term investor who believes in the future of e-commerce and is okay with a little bit of volatility,
Right. Comfortable with that roller coaster.
Shopify might be a great addition to your portfolio.
Yeah.
But if you're looking for something that's a little more low risk,
Yeah.
a little more predictable, Shopify might not be the right fit at this time.
You got to find those investments that really align with your own personal financial goals.
Your risk appetite.
Yeah.
As with any investment, do your research.
Always, always.
Don't put all your eggs in one basket.
Let's spread it around.
Most importantly, invest wisely.
Well said, well said.
I think we've officially reached the bottom of our deep dive into Shopify's financials.
Yeah.
It's been a fascinating exploration.
It has been.
Hopefully you found it valuable.
Lots of insights there.
Now, before we sign off, a final thought to ponder.
Oh, okay.
We've talked a lot about Shopify's ambition to kind of build this ecosystem, become more than just a platform.
Right.
But what if they take that ambition one step further?
Okay.
What if they aim to become like the operating system for all of e-commerce?
Whoa. That's a big one.
It is.
That's a provocative idea.
It is. Raises all sorts of questions and possibilities.
Yeah. Could they pull it off?
Yeah.
What would the implications be?
For everyone. For merchants, for competitors.
Yeah. For the whole industry.
The whole landscape could change.
It's a future worth exploring.
It is.
That's what the deep dive is all about.
Absolutely.
Giving you the knowledge,
Mm-hmm.
the insights to think critically
Yep.
about the world around you.
That's what we're here for.
So keep those questions coming.
Yeah.
Keep diving deep.
Keep learning.
And we'll see you next time.
See you next time.
For another fascinating exploration.
Can't wait.